Good evening, crypto degens. How you doing this fine evening? I hope you had a good weekend. So we had some war this weekend. As you know, U.S. and Israel attacked Iran, or at least the Iranian government. But crypto seems to be doing all right. Bitcoin is actually up today, 5%, and it went down a little bit, went up a little bit, down, now it's back up. So that's pretty good. Some altcoins are up also, but not. Most of them aren't up a lot. Near is up like 16%, but otherwise, like the top 50, they're not really doing better than Bitcoin. But the question of the day is retail, or are normal Bitcoin holders, or is the crypto community kind of losing their mind a little too much on the topic of institutional adoption? It's like there's this new narrative that's, well, now that it's going into the hands of the big boys or the government or the institutions, the banks, our project has failed. Like, our project is done. The money for the little people, it's done. So that's, let's see what some people have to say about that, because maybe we've been getting a little carried away on this, and we still might have our bags pumped through this adoption. So let's see. We have 𝘃𝗶𝗁𝗏 pushing back on this narrative that I just mentioned, saying that some holders are losing the plot as traditional finance moves in. Let's see what she has to say. I thought it was kind of interesting, so we'll just go ahead and listen to it. It's not that long.
Bitcoin is the first global, digital, private, meaning no government oversight, rules-based, most important part of it, monetary system in history. That is a very big idea. Now, what has happened in the last year or so, stablecoins have been usurping one of the roles that many of us thought Bitcoin would play. In the emerging markets, people who are living hand to mouth, meaning they don't have a lot of savings, they would much prefer the dollar. And stablecoins are backed pretty much 100% by dollar or dollar-based assets.
Okay, so this is interesting because she's saying that people are actually preferring stablecoins to Bitcoins. Now, this is one thing that I've been saying, that people say, well, Bitcoin is scarce, there's a limited amount. And I'm like, yeah. That's true when you're talking about just about Bitcoin, about the brand, the actual Bitcoin brand and coin that people have adopted first. But there's no limit to the amount of cryptocurrencies that can be created. And we already have several cryptocurrencies that are very big, that have very big following, very big communities. So the money is going to get spread out between not just Bitcoin, but like all these coins, the whole market. The whole market can continue to get bigger, and people can put more and more money into other coins, especially as Bitcoin gets more and more expensive. So that's why I'm not a big fan of this argument of the scarcity of Bitcoin, and Bitcoin is the be-all and end-all of everything. And that's kind of what she's saying here. Like, yo, people can now hold dollars without actually holding dollars. They can hold dollars in their crypto. I mean, this is kind of like, you could just call this tokenization, right? Stable coins represent the dollar. And soon people are going to be able to buy just anything on the blockchain. Nobody's controlling you. There's no brokers. There's no banks. All you need is an exchange. You get your money into an exchange, you buy some crypto, you send it into the crypto network, then you can do whatever the hell you want. You just got to get that money into the crypto network, and there's nobody can stop you, and nobody can tell you what to do. You can hold any asset you want. You hold crypto that represents any asset you want. These are exciting times. So let's continue.
And so that is their preferred insurance policy against their own currency's devaluation and the loss of purchasing power and wealth. So from that point of view, in our long-term forecast, which our bull case for 2030 has been $1.5 million, that would have taken $200,000 to $300,000 off of that price target. But what else has happened in the last year? We've seen gold really go parabolic, and Bitcoin has not done the same. Well, how can that be? It's digital gold, we thought. Well, if you look at the correlation between gold and Bitcoin, you'll see it's very low, especially since 2019, since more traditional investors have been getting involved with it. The correlation is 0.14, so almost no correlation. But if you zoom out and you look at the longer term price chart of Bitcoin, what you'll see is gold often leads, and certainly in the last 2 cycles, Bitcoin's performance. So gold is a leading indicator in at least the last 2 cycles. We think the other thing going on is we're seeing a lot of OGs selling. Those who were very early adopters of Bitcoin are selling. Now, why are they selling? Well, according to some of them, Bitcoin has lost the plot. Too much traditional finance or financial players are getting involved. And from our point of view, all along, and this is in our collaboration with Dr. Arthur Laffer, known for the Laffer curve, he has said the more that Bitcoin becomes involved in the traditional financial ecosystem, meaning traditional financial institutions start adopting it, the stronger his conviction will be that it is indeed the new global monetary system I described. So our conviction has actually gone up as Bitcoin has gone down here.
So she said, like, a lot of the people that bought early are selling, like saying, well, it's no longer what it was. But I mean, why would you sell when we're just starting to get institutional adoption? Why would you sell when it's expected that the price is going to continue to go up? That doesn't really make a whole lot of sense. Now, if you want to sell to take some profit because you've made life-changing money, you got enough money for your family to live comfortably, that makes sense, or sell part of it. I would, for sure. But why would you sell at 60,000 when we saw it was just recently up to 120,000? I could definitely see selling, when it gets back up there. But yeah, so I think we shouldn't get too overworked about institutions taking over. What we need to do is continue to front run these institutions. We buy before they all get in. And hopefully you guys have been buying. Make sure you buy the stuff that's getting adopted. Buy the stuff that's being used by the institutions, that's starting to get implemented by the banks and by everyone else. So Bitcoin is getting adopted in terms of just people buying it, like countries, or they're trying to make the Bitcoin reserve and all that. But Bitcoin's not used like functionally. It's just like, let's just hoard it. But you've got Sol, you've got XRP, you've got these top altcoins that are being used, are getting integrated into systems. Chainlink, big time, getting integrated into systems. These will probably go up a lot in value. So yeah, I mean, I would just keep front running. Everything is cheap right now. Front run the institutions, get in before they do. But always DCA, because crypto is very volatile. Very, very. Okay, so we have a video here of Brian Armstrong. He explains some experience he had with the U.S. government. He was talking about Elizabeth Warren and how she's anti-crypto and how she appoints people, I forgot what it's called, and they control stuff. Well, let's just see what he has to say, because he's going to explain it better than me, and I think I left it at the right point here.
It's like her own political agenda, basically. So she got kind of her hooks into these banks, had a lot of influence over them. Suddenly crypto comes along, which is a new system operating outside of that. And she didn't like it too much. And so she asked, my understanding, this is kind of what other people in the Congress told me, is that she asked Gary Gensler to go hard on crypto and like try to really curtail it in the United States. And that's what he did. He created a bunch of lawfare, essentially. Like, we'd go in to meet with him. We did maybe 30 times. We met with the SEC after becoming a public company, where they allowed us to become a public company. And we'd say, hey, we're here. We'll tell you anything you'd like to know. Just tell us, what are the rules? We're here to we're trying to build this industry in America. You tell us the rules. We follow the rules. That's how it's supposed to work. And they would say, we're not going to give you any advice. Go talk to your lawyer. And then the next day, enforcement action would arrive. And we'd say, well, what can you show us in the law? What you think we've done that's wrong? Like, no, we're not going to do that. You need to comply, basically delist all these assets, or we're going to sue you.
Yes. Those people who are complaining that Donald Trump isn't doing enough for crypto, that crypto's down since he's been president, it's his fault, this and that. This is the way it was before this new administration came in. They did everything. According to Brian Armstrong, it was Elizabeth Warren would appoint these people to stop crypto. So they would go in and they would meet with these people, and these people would not tell them any regulations, any rules. There was nothing defined. And then when Coinbase and exchanges would go about their work, and then they would get sued. They would get sued, and they would be like, what do we do wrong? And then they wouldn't tell them, you have to get rid of all this. You have to stop selling these coins and stop doing this. And so there was no regulation, and it was just, everything was just set up to screw the crypto companies. And that's how it was before. So it's very, very, very important that this new administration is not like that. So, according to Simon Dedek, he says, 𝗵𝗶𝗶, the blockchain, quietly pulled a 7x over the last 3 months. I expect this trend to continue as crypto plus AI, or times AI, is shaping up to be the obvious bull case and the inevitable future of the industry. It won't be easy to spread the wheat from the chaff among all the noise. However, if you find the projects that are actually building something solid and fundamentally valuable at this intersection, you found the obvious winner. Let's take a look. So we can see that over the past year, this crypto has been climbing up. It's kind of a mid cap at 334 million. But if we look at the max, when it launched, it just basically crashed, went way down, and now it's been moving up. So the thing is that it's really very hard to know what projects are going to do well. I mean, there's so many projects, and for some reason, stuff just pops off. People start buying it, starts moving up. They can say it's fundamentals. But there's probably a lot of projects that have fundamentals that don't pump. I think it's mostly marketing. So, and there's tons and tons and tons of AI coins. The AI narrative already took off in 2023. So you don't know. I mean, it's easy to see something pump and say, look at this, but it's so hard to know. The safest thing is to buy the good coins. Buy the good coins, take whatever X you get, 3X, 4X, you get a 5X. And then you can make some small bets here and there, but it's very, very hard. You have to get lucky to find these coins. So Pantera Capital, Dan Moorhead says, crypto is flashing one of its strongest relative value signals in years. Crypto is trading 50% below its long-term trend. It's sitting near the 7th percentile of its 8-year valuation range. Historically, it has been higher 93% of the time. So crypto looks cheap, especially versus AI stocks, which are trading about 20% above trend. He also pointed to Bitcoin's long-term track record. Every investor who has held BTC for 4 years has been profitable historically. So if you just hold it for more than 4 years, you're going to make a profit. Basically, that's what he's saying. 4 years seems like a long time, but in 4 years, you're going to want to be rich. I mean, you're going to want to have more money than you do now. So nothing's going to change in 4 years. So it's best just to be patient and buy for 4 years, buy and hold for 4 years. So we're not gonna put this video because we've already watched 2 videos. The Big Short investor, Michael Burry. I guess the Big Short. I don't know what I mean by Big Short investor. Maybe it's somebody who took the Big Short against the real estate market in 2008. Because there was a movie called The Big Short about that. Anyways, he said Bitcoin will crash to 50,000. Well, that's not a crash. 50,000, that's nothing. Okay, so we got a interesting thing here. It says a trader swapped 220,000 USDC to USDT and only received 5,000 because he got 𝗵𝗍𝗐. So 𝗵𝗍𝗐𝗍𝗲. So they're saying that he was sandwiched. Okay, so I thought this was interesting. Like, oh, well, what does that mean? He got sandwiched. So let's check it out. What happened with this? Oh, shoot, I lost. Oh, here we go. Okay, so how does a sandwich work here? Okay, so maximal extractable value, MEV, maximum extractable value is profit that validators or bots can extract by reordering, inserting, or censoring transactions within a block. It commonly affects users trading on DEX, such as Uniswap, SushiSwap, PancakeSwap. I would say, so okay, so you're in crypto, you're on one of these blockchains, you're using a DEX. They have automated market makers where prices shift based on the trade size and the liquidity. If you've ever used a DEX, you know, it's like you go there, you select the coin you want to trade, you select what you want to use to pay for it, and then you always have like this thing called slippage, and you always want that slippage to be really low, because if it's high, you can get totally screwed and not get your money's worth. So, and then, okay, so here they say how a sandwich attack works. It happens in 3 steps. Your 220,000 swap appears in the public mempool before confirmation. An attacker front runs. There's a bot submits a transaction before yours, buying USDT and pushing the price up. Now, I don't know how they can push up the price of USDT so much. Your trade executes at a worse price because the price was just inflated. Your swap executes at a heavily distorted rate. If slippage tolerance is high, what I mentioned, slippage, it will still execute even at a terrible price. So you got to make sure the slippage is low. So the bot sells back the USDT immediately after your trade, capturing the price difference as profit. You are left with a loss. If slippage was set to something like 50 to 90%, that could explain him losing so much money. And I just think it's weird that kind of slippage with a stablecoin. He may have swapped through a small liquidity pair, a malicious pool, a misrouted path. Yeah, I mean, that's not normal. That's not normal. You got to be, I don't know. Do you want to be swapping that much money on PancakeSwap or on... If I'm swapping that much money, I would rather it be on like Binance, like on a reliable exchange. Because, I don't know, man. I don't know. And you got to look at sometimes weird stuff pops up. Like when you do exchanges or when you do trades on the blockchain, sometimes weird stuff pops up. And you could lose money. So you got to be careful. Anyways, but that's a very, very extreme case. I really don't know how they managed 5,000 out of 220,000. Or if that's even true. Okay, so Crypto Coach says, I don't pray for bull markets. I accumulate in silence. Predators don't celebrate their position. So just shut up. Keep buying. That's it. Don't talk about it. Keep buying. Keep stacking. I have some friends in crypto. Some of the wealthiest. Or they started a little earlier. And they always just keep stacking. Prices would go down, they'd buy some more. And they would they wouldn't buy that many different things. They would just keep stacking good coins. They would just keep stacking Bitcoin. And that's it. And it just, over time, over 5, 6, 7 years, make a lot of money. Crown. This dude is a trader. I've seen him on Elio Trades. So he says, BTC March 2026. Unlikely we see price below 53,852 or above 76,139 this month. In my opinion, more range-bound boringness. So he thinks we're just going to stay in this range for this month. Could totally happen. I think maybe, until we get the Clarity Act, because maybe people are distracted with the Clarity Act and they're thinking, well, we need the Clarity Act to go up. Or after the Clarity Act gets approved, then we're going to go up, so then I'm going to go in. So that might be messing us up a little bit. I lost my page here. Jim Cramer says American Bitcoin investors could potentially lose everything. Well, if we're going along with reverse Cramer, that means things are going to do well. And let's just finish off here with Crypto Tony. We got a meme here. Day 60 of 2026. Raining his food, soaking wet. He's got fire burning all around him. Just everything. Tanks. Everything that can go wrong, like or anything that can bring the market down, has. Aliens running around. Everything going as planned. Yeah. It's a good meme. Excuse me. Well, that's it. That's it for today. Hope you guys have a wonderful evening. Enjoy your evening. Enjoy your family. Be happy, and I'll see you tomorrow.